Hello, Namaskar viewers. I am Sanjeev Pandya welcoming you to this week's episode of the Tax Talk with AJ. The show is brought to you by Sai CPS Services, a full-fledged, complete professional accounting firm located in the state of New Jersey. Multiple locations in the state of New Jersey can assist you with your personal taxes, business taxes, or any taxes-related matter. No matter where you are in the United States of America, they can be reached at 908-888-8900, 908-888-8900. In-person appointments can be set up with any one of the two locations in New Jersey. And then, of course, Zoom call and, over the phone, everything can be set up for all your tax needs. When it comes to personal taxes and business taxes and all the tax-related matters, Science CPA Services believes in doing taxes right. Taxes must be done right, and that's why they have a huge clientele and a very happy and satisfied clientele over the years. With that note, I'd like to welcome Mr. Ajay Kumar of Science CPS Services. More than 25 years of experience when it comes to accounting. He is a CPA, MBA, and CVA. Ajay, good to have you here in the show.
Thank you, Sanjeevji. Thank you for the kind introduction.
Sure. And viewers, just want to let you know, Science CPA Services can be reached at 908-888-8900 or visit their website, sciencecpaservices.com. So, AJ, September 15 deadline is gone, and now you must be working towards October 15 deadline.
Yes, so September 15th is the business tax deadline. October 15th has C corporation, larger businesses, and individual taxes. We don't have that much of a pressure on October 15th. Most people have filed their taxes by September 15th, if not sooner. So now after October 15th, in next 3 months, last quarter is more about tax planning as opposed to tax filing.
Yes, of course, and we'll give you more information on the tax planning. Let this month of September go by. Between October and November, you should plan your taxes. You should invest the money in a certain plans, whether it's a IRA, 401k, or other plans where you can, after investing, you can save your tax liability. So that's a thing we're going to be discussing in the next quarter right here in the Tax Talk with AJ. Anyway, so now let's bring in today's topic. It is said that, millionaires pay less taxes. They are millionaires. But now the recent study has come out, and the study says billionaires pay less taxes than an average American. And we're talking about billionaires with the word B. How are they paying less taxes than an average American individual paying taxes to IRS? And this is a study by very credible sources. Forbes is involved, and IRS is involved, and the other institution is also involved. So, AJ, how can it be possible that billionaires pay less taxes?
Well, as you were discussing, this is an apt topic right now. And the question you ask, how is it possible that the billionaires with the word B are paying less taxes? But before I give you the gist, before I give you the hidden tricks of the trade, let's look at some numbers first.
Please.
So this study was done by UC Berkeley, a very, very reputable research agency. The information was provided by Forbes and IRS. And this study has information over 10 years, between 2010 and 2020. For over those 10 years, the study finds that billionaires pays effectively, federal and state added together, 24% tax in total, income tax we are talking about, while average American pays 30%, and some people pays as much as 45%. So if you are an average American working hard, have a W-2 salary, small business, your taxes could be as high as 45% when we talk about federal and state added together. Most average American, if you take the average in general of the population, people pay 30% federal and state together, while billionaires, top 400 billionaires, on an average paid 24% federal state together in income taxes.
All right. So now one thing is certain that there are loopholes in this, in this tax strategies. So there are definitely loopholes which billionaires are taking advantage. And obviously, you don't even have to go that far. President of the United States, Donald Trump, obviously, when he was running for the first term, when he was running in the first term as a president, obviously his tax returns were the issue of the campaign. They were not released, and finally, when they were released towards the end of it or after the term, then we found out that how much taxes he paid, being a billionaire himself. So anyway, the bottom line is yes, there are loopholes. So let's look into it, AJ. That what are the loopholes and the gap 24% versus 30%. It's a quite a large gap. I mean, we're talking about, right?
Absolutely,
Because
absolutely.
this middle-aged Americans work very hard. There's no such thing as now 40 days a week because it's already 55 days a week. One is that your working hours are longer. The company asks for more productivity. Then you spend so much time in the traffic commuting to work and then back home. So that means you're putting more and more time towards your work-related task, and then you still make less money, and then you end up paying more taxes. So AJ, how is it possible that
Absolutely,
billionaires
Sanjeev.
are getting these tax benefits?
Very well put, Sanjeevji. You are 100% right. Without naming the name, we will not be naming the names here, and we will not be calling it tax loopholes. We'll call it smart tax strategies
Okay.
for the purpose of this show. But you are 100% right. There are a lot of smart tax strategies that can be used. And even though when we talk about 24% versus 30%, it seems 6%. But if you are making $1 million, it means $60,000 additional taxes. So it can be a very significant amount depending on how much money you are making. So let's look at some of these strategies, smart tax strategies, and this is the time. Last quarter, October 1st to December 31st is the time we use for implementing some of these tax strategies to lower your tax liability. And as you said it very well, Sanjeevji, these people, billionaires, rich people, can afford the smart tax planner. They can afford the strategist. They will not be waiting till March and then trying to find the donation receipt. They have planned it well.
Yes.
They have looked at it. They have seen how much income they are expecting to make, what income tax bracket they are going to fall, who they need to donate, how much they need to donate, everything is pre-planned. When you find yourself in a situation that you are trying to find the W-2, you are trying to find the donation receipt, and that too in March at the time of tax filing, that's when it comes out to be, it is what it is. You don't have any planning around it. If you are paying 30%, you are paying 30%. If you are paying 45%, you are paying 45%. So the idea is, if you invest some time before the year end, in this fourth quarter, to see how much income you are going to have, especially if you have a small business, you have a lot of strategies that you can use. A lot of times W-2 is what the W-2 is. You don't really have too many things you can do. You can have some 401k, you can have some IRA, you can have some 403b, you can have some FSA account, but the options are limited when you have a W-2 type of salary. But if you have a small business, you are not doing tax planning, then onus is on you. It's your fault that you are paying higher taxes.
Yes. Well, that's why you need a smart, CPA and a tax planner to look into it. Now, let's go into detail. What are the deductions that billionaires use it more often to reduce their tax liability than the average Americans?
Absolutely. So we have listed, and we'll put it on the screen. We have listed 10 main strategies that a lot of these billionaires are using. So the first strategy is, let's say, the C Corp. Dividends are typically taxed at a lesser rate. The cash flow from C Corporation is not taxed. So a lot of these billionaires, they don't have the flow through income producing entity. They will create the C Corp, and whatever the profit the C Corp is making, they will try to take a loan against it. And this loan will continue until they sell their shares, and then they will try to offset it. It creates a perpetual income stream where these billionaires are not paying any taxes. So when you have time, read through it. study, we will be discussing 10 strategies in the span of 10 minutes. So we'll not be elaborating on any strategy, but the idea here is a C corporation, income generating, where you don't have the payroll and a lot of money is coming to you as shareholder, as loan to shareholder, not as taxable income. And the loophole here is the concept that this plan is exploiting is that the loans are not taxable amount. Because in theory, they are expected to be paid back, and typically these loans are paid back when the corporation is dissolved or when the person dies. So it comes through the will, and at that time it's not taxable. But the idea is loans are not taxable. This is what we are exploiting through a C corporation by having shareholders loan as opposed to shareholders distribution.
Okay, that's interesting. So, out of 10 strategies, can we just quickly go one by one? First is income gap.
Absolutely. So a lot of time the income for these wealthy people is much higher than the people who are not billionaires. So in that case, the income gap creates a situation where higher income should result into higher income taxes, but when you cross this billionaire limit, you don't really create the taxable income. You are making a lot of income, but it's not all taxable income. A lot of this income is unrealized gains. Take an example. If you have $1 million, and I'm taking a small example, we are talking about billionaires here. If you have $1 million in the stock market, you made 10%, you made $100,000. But is it taxable income? No, it's not taxable income. So even though you are making billions of dollars, your taxable income is very low. So income gap defines the actual income is much higher while the taxable income is much lower.
All right, so after income gap being one of the 10 strategies, let's look into the other strategy, which is limited dividend distribution. Quickly, how does that work?
So in a C corporation, the dividend, the profits are distributed to all the shareholders. So when you are in a controlling position, when you own more than a certain number of shares, instead of distributing the income as dividend, you take loan against your shares from the C corporation. If you take dividend, that makes it taxable income. But if you take the same money as loan, because you own the company, then loan is not taxable. So you keep taking loan every year until you dissolve the corporation or until you pass on to the next generation. And in that case, this becomes a perpetual income stream, perpetual loan that's never taxed.
All right, that's something that you mentioned earlier also, but that was in a brief and this was in a detail. All right, folks, with that note, we're going to take a short break. And when we come back, we'll continue our conversation as AJ will guide us and educate us that how billionaires are paying less taxes than you and I combined. Welcome back to the second half of the Tax Talk with AJ right here on ITV Gold. All right, moving on to the show. Today's topic is billionaires pay less taxes than average Americans. And the question is, why? What are the things that they do better than the average Americans? There is a 24% average 24% tax that they pay, and the average Americans pay 30%. So there is a 6% gap, and this is all the study was done by Forbes and, of course, University of Berkeley. All right, and then IRS also confirmed this thing. So that's what we are discussing. There are 10 strategies. We discussed already 2 strategies, and now we are to third strategy, which is the negative income rollover.
Absolutely, Sanjeevji, you are 100% right. So the idea here is not that why, we are not disputing that fact. We are trying to help you understand how these billionaires pay lesser taxes and what can you do in next 3 months before the end of the year, especially if you have a small business. So negative flow through income, the concept here is you have an LLC and or S corporation where you show a lot of investments that you are making, claim large depreciation, large losses that can help you offset your other income, the income that you have, dividend income, interest income, passive income, that can all be offset against these losses that you have through the flow through LLC and or an S corporation. So whenever you have a situation that you're trying to start a business, you're not expecting to make a lot of money, you will probably have losses, make sure it's a flow through entity, meaning LLC or S corporation.
Okay, very well. What's this strategy called declining income tax rates?
Absolutely. So if you go back, statistically speaking, and I want to give a disclaimer over here. When President Trump came last time in 2017, we brought in TCJA, Tax Cut and Jobs Act. That has helped a lot to these billionaires as well. But if you go back, this study was done over 10 years, from 2010 to 2020, and they have found that the income tax, effective income tax rate that these billionaires, top 400 billionaires were paying, was going down effectively from 2010 to 2020, meaning the system is getting smarter. The tax rates are effectively going down for these billionaires, while for average American, they seems to be creeping up.
Okay, and the reason that they had this less tax rates for these billionaires is because, government thought that if we give them a break, they would put money back into the country, they would put money back into the economy and employ more people and run their businesses more effectively. Is that the reason?
Part of it, a lot of, see, when this tax bill, and we call it OBBA, one big beautiful bill, when this bill came out a couple of months ago, July 1st week, this bill has over 1,000 pages. Now, how many people are reading those pages? How many people can consult a smart accountant? How many people are investing time into effectively tax planning? The biggest section of this bill is Section 179, deduction, bonus depreciation. A lot of things you can buy locally and claim the expense immediately. You don't have to pay. Consider a situation. Quick example, you buy a machine for $100,000. You only paid $1,000. Everything else is on payment plan. Guess how much expense you can claim? $100,000. You paid $1,000. The expense you can claim is $100,000. Tax you can save is $30,000-$40,000.
Wow.
So a lot of tax planning can be done when this new thing comes. A smart tax planner, a wealthy person will hire the right people to do the tax planning, discuss the situation. They are not leaving things to March, April. They are not struggling to find a receipt in March, April to do their taxes. They are spending time now. A dollar saved is a dollar earned. That's the theory they are using.
Okay, all right. Continuing that conversation, you just explained this one also, but a less business income tax, and that's the reason you just explained. I guess billionaires use that one of the strategies that were less business income taxed.
Absolutely. So the corporate income tax prior to TCJA, and I'm talking about 2017 here. I'm not talking about OBBA. In 2017, prior to 2017. The corporate tax rate, the highest corporate tax rate used to be 35%, which was cut down to flat 21%, 14%. And a lot of these billionaires invest into C corporation. If you're losing money, you invest into flow through, S Corp LLC. If you're making money, so you don't have to show the profit. The profit does not flow into individual taxes when you have a C corporation. You take loan from the C corporation, loan to shareholder, which by definition is not taxable. So you have to be sort of careful as what you do, how you plan it. But the strategy here is, since the corporate tax rate has been reduced from 35% to 21%, it creates 14% tax saving if you play the game right.
Okay. All right. Corporate tax cuts. How does that help, to these billionaires to pay less taxes?
Well, it's not one thing that helps these billionaires to save.
It's all put
millions
together.
of dollars.
One thing leads to another.
One thing leads to another.
Sure.
So corporate tax cut, be it part of 2017, be it part of now, OBBA, all these tax cut helps them get to the next level, help them save another penny.
Okay. And the estate taxes, that also helps them a lot, right?
Absolutely, 100%. So a lot of these billionaires have large estate, as you can imagine.
And gift taxes.
And gift taxes, right? So we know there is a gift tax limit. We know in the state, say New Jersey has no estate tax limit, but federal tax limit is 13.99 million, 14 million. With portability 706 filing, you have 28 million. But we are talking about billionaires here. So what do? You play with 1031 exchange. Swap till you drop. You keep exchanging the building, so you don't have to pay taxes. And all these appreciated stocks, appreciated assets are given to the next generation at market value, meaning no taxes. So you bought something for $10, keep exchanging it. It became $1,000. When you passed, $1,000 worth of asset was given to the next generation And how much tax do they have to pay?
Zero.
Zero.
Obviously. All right. Charitable contributions, which can reduce their taxable income as well.
Absolutely. People, you believe me, people are trying to find the receipts at the time of filing taxes. When we say how much contribution was made, I put it to Hundi, I put it to the temple. Let me see. This is not how it's supposed to be done. You should not donate money. You should donate appreciated assets. If you bought a stock, take one example, please. If you bought a stock for $1 and you want to donate $10,000, if the stock is $10,000, if you donate that stock, you don't have to pay capital gain taxes. Instead of donating cash, donate appreciated stocks. Now the limit is up to 60%. So these billionaires are donating money anyway for their cause. They believe in certain cause, but they are rarely donating the real cash. They are donating appreciated stocks. So not only they don't have to pay the capital gain tax, they save charitable contribution tax deduction at the market value.
Okay, all right. One interesting strategy that I really like to know more about it, which is legislative. It has to do with the legislative favorability.
Well, there are a lot of legislative changes, and you have to know. It also depends on which area you live in. You have to know the exact. You have to have a favorable map. Say, for example, a lot of people would like to move to Florida. A lot of book writers. Book writer is defined as somebody who has only passive income, is moving to Cayman Island. Just because Cayman Island has no corporate taxes, no personal income tax, no business tax. So once you know the lay of land, once you know what taxes are applicable legislatively in the local area, then you can plan your situation right. And it's not meant for everybody. And again, not all the situations are meant for everybody. The idea is for you to be aware of, for you to discuss this thing with the accountant, with the CPA, to see what's applicable in your case. If you can't implement all the 10 strategies, implement one, and that can create a difference to your tax liability.
All right, viewers, as we are discussing, billionaires pay less taxes than average Americans in this episode. And then after getting information on those 10 strategies from AJ of Science CPA Services, I just have a question or two, just a random question. So, now, these are the billionaires, and now we know that they pay less taxes because they have these options available where they can save tax liabilities. But my question to you is, do billionaires earn salaries just like workers like you and I and everybody else do?
They can. Most don't.
Okay.
Because when you get the salary, take an example. If your salary is $100, you pay 6.2% in Social Security. The employer pays, they own the company. So the total Social Security is paying 12.4%. Total Medicare is 2.9%, 1.45% for the employee, 1.45% for the employer. And they own the company. So another 2.9%. SUI, SDI, state unemployment, state disability, family leave insurance, state income tax, federal income tax. You run the payroll for $100, you get $60 in your hand. And then on $60, you're expected to pay taxes. You go out, you pay 6.625% sales tax, you pay the property tax, you pay the water tax, you pay the excise tax, you pay the inheritance tax. By the time all these taxes are paid, you have 60% paid in taxes, 65% paid in taxes. So not that they cannot, most billionaires will choose not to be on salary.
So then what do? They take one draw out at the end of the year?
Well, no, this is the trick here. We talked about the dividend distribution. We talked about the loan for the shareholder. Yes. We talked about showing losses in the flow-through entity. We talked about having unrealized gains. We talked about donating appreciated stocks. So there is not one strategy that these billionaires uses. It's a stack of strategies. And these strategies are sort of case sensitive. Not everything will apply to everybody. You have to see in your situation, at your income level, as much as we keep saying billionaire, but there are a lot of strategies. These strategies are concepts. They are available to everybody. They are not tax loophole. They are tax strategies. If you are a millionaire, if you are making 100,000, 200,000, see what's applicable to you. What can you do? What can you use in your situation?
All right, and then the next goal should be to become a millionaire and then soon become a billionaire so you can save a lot of money on taxes. AJ, thank you so very much for your guidance and insight information on these billionaires' tax strategies. All right, when we meet next week, same place, same time, we're going to bring another topic discussion here for you so that way you know about the taxes. Remember, for all your taxes matter, personal or corporate taxes, or even for a tax audit, or even for a virtual CEO, CFO, payroll services, anything is possible through Science CPA's knowledgeable, experienced CPAs on hand and very well qualified accounting staff. They can help you anytime. They can be reached at 908 888 8900 or visit their website sciencecpaservices.com. Until we meet again, as I said, you do take care of yourself and dream to be a billionaire. So long.
Thank you.